Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. This Friday evening, let us break down the RBI Monetary Policy Committee meeting decisions. Let us dive deep into the various announcements that happened today and the possible impact that those announcements are going to have on various sectors in the economy. Let us quickly go through the various key announcements of today's meeting. Firstly, the repo rate remain unchanged. RBI for the 11th consecutive time has kept the repo rate steady at 6.5%. Now this approach of RBI reflects a balanced way in tackling inflation and supporting economic growth. Secondly, in a surprise move, RBI slashed the CRR, cash reserve ratio requirements of the banks. Now it slashed CRR by 50 basis points to be reduced in two tranches of 25 basis points, one on the 14th of December and the second one on the 20th of December this year. Now, this reduction is expected to bring liquidity in the market to the tune of 1.16 lakh crore rupees. With this increased liquidity, it is going to enhance lending opportunities of the banks. The third important announcement was regarding the inflation output. Now, RBI has revised the consumer price inflation forecast for financial year 2025 from 4.5 to 4.8. Now, this increase in the inflation forecast is mainly anticipated to the heightened food inflation in the last quarter. Despite this increase, RBI is of the view that the inflation will moderate in the coming quarters. The taming down of inflation will happen or is expected to happen once the kharif crop hits the market. Fourthly, RBI has reduced the GDP forecast for this financial year from 7.2% to 6.6%. This is mainly attributed to the subdued second quarter results announced by many companies some time ago. Add to it high inflation, lowering of consumption, global uncertainties still prevail. China is coming out with revival packages. All these have impacted in this slowdown, and RBI has rightly corrected its GDP forecast from 7.2% to 6.6%. RBI Governor Shaktikanta Das said that the RBI has maintained its neutral stance. So now all eyes will be on the February MPC meeting, where it is expected that RBI will start with the rate reduction cycle. What is of interest to us as investors are is which possible sectors are going to get impacted because of these RBI announcements today. Now, first and foremost, banking sector is going to be benefited. The reduction in CRR by 50 basis point is a clear winner for the banking sector. It is going to increase their liquidity positions and potentially boost their net interest margins. It will help to increase credit growth in the market. The second sector which is going to be benefited by today's RBI announcements is agriculture. RBI has increased the limit of collateral free agricultural loans from 1.6 lakhs to 2 lakh rupees per borrower. Now, what this is going to do is it is going to help the rural economy and boost agricultural sector. The technology sector is also going to get affected. RBI plans to introduce free AI in the finance sector along with a framework for ethical AI. Now, RBI Innovation Lab in Bangalore has developed a MuleHunter AI model. What this basically does is it helps to detect mule accounts. Now, what are mule accounts? Mule accounts are bank accounts which are used for illegal activities like money laundering and fraudulent transactions. Small finance banks can now offer pre approved loans on UPI, potentially expanding their customer base and service offerings. Following this, it would be beneficial for investors to keep a close eye on the banking sector, which is going to get benefited from increased liquidity Also agricultural sector, which again is going to help boost the rural economy because of the increase in collateral free agricultural loans as per RBI announcements. Thirdly, fintech and AI related firms as RBI pushes technological integration in finance. And lastly, small finance banks as they gain new avenues for loan disbursement. RBI's latest policy decisions reflect a balancing approach towards supporting growth and managing inflation. Unchanged repo rate suggests caution, while CRR rate cut suggests a proactive approach by RBI to address liquidity concerns in the banking sector. As investors, it will be beneficial if we observe how these policy decisions pan out in the real world. Will increased liquidity help increase credit growth? Will changed forecasts in relation to GDP and inflation have impact on various financial sectors? It is very necessary that we have keep an eye on what actually happens in the real world, which is going to impact our investing decisions. So this is what we have in today's video, and I hope this video has helped you understand what announcements RBI made in today's MPC and their impact on the economy and our investing decisions. I hope you have liked this video. Please like, share, and subscribe to my channel for more such information and educative videos. The aim is to help you in your investing journey. Until next time, stay safe. Goodbye.